Good afternoon, everyone. Welcome back. Welcome back, Patrick.
Welcome, everyone.
Today, we're going to talk about one of our key levels, which is the one-day expected move indicator. We're going to show you some examples. But as always, before that, let's look at the disclaimer. And please send us a comment if you can hear us. If you have any issues, post it in the comment box. Thank you. All right. So the one-day expected move indicator. So we're going to look at what it is. We're going to look at some backtesting. We're going to look at some examples on how you can use it and why it's important from both a trading perspective as well as risk management perspective. And then maybe, Patrick, you can give us some hints on how you use it for your trading, especially when you look at futures. So yeah, I think that could be a good point. Welcome, Ian. Welcome, everyone. All right. So this week we talked about gamma levels. I just want to share this. So the one-day expected move, one-day minimum, and one-day max is part of what we consider our primary levels that you see on the left-hand side. We also have our secondary level, which are our JAX level 1 to 10. Which we're going to share more information about it tomorrow in the session live tomorrow. But today we're going to focus on the one-day min and one-day max. So what is the one-day min and one-day max? So the one-day expected move indicator is our proprietary indicator, and it's kind of like a volatility indicator that helps you understand the daily range for the price. So where could the price move within the day with a high level of accuracy? So the goal is really to forecast the next day price action. And obviously we have one upper band, which is the one-day max, and the lower band, which is the one-day minimum. So the one-day max is really the maximum price move that according to the indicator can be expected for the next day. And the one-day minimum is the minimum price move that according to the indicator can be expected for the next day. The way it appears on your chart, here you see obviously the price action for the next day, and you see the max and minimum level. So those are kind of volatility bands that you can add to your charts to understand, okay, where can the price move? And that can be used, we're going to look at it in a second, as your risk management tool, as your trade management tool, and profit management tool as well. So why is it important, right? So first of all, it helps us have more clarity in kind of like volatile markets, right? So if you are in a volatile market condition, knowing what the expected range based on forward-looking volatility is can help you really predict potential price swings or even react to those. So that's obviously a key point. The second step is really improved risk management. So by having your target level, which is the upper band and lower band, one-day max, one-day minimum, you can actually use that in conjunction to your trading strategy to understand, okay, where could the price go? Where could be my target? And at the same time, you can also use it if you are looking at stop loss levels. And I think, Patrick, you have some good examples there. And then finally, proactive trading, right? So instead of reacting to market moves, traders can use the one-day move to proactively position themselves the day before, the day ahead, or whether you are trading options. A lot of our users are actually using these levels to sell options and to look at strikes that might not be hit for the day. So that's also like another important use case. So if you are like a 0D iron condor traders, this is a very good application of the indicator. Okay, before we go into some examples, I don't know, Patrick, if you want to add anything before that.
I think we was covering everything, and we were speaking yesterday about the strong we were speaking about Monday and Tuesday about the strong magnets, and we're speaking about core resistance and put support. And I found out for myself that the one-day max and the one-day min, when we have really strong momentum in the market, this could be also a really strong momentum and also a really strong magnet. So I like it as you were saying, like have this as target. But this doesn't mean that this is holding. We have backtesting data. Most of the time it holds. But on really strong areas, we have today Tesla 20% up in the market. Amazing. Of course, the one-day max or the one-day min will not holding there. So when we have really strong days, so this is also a good indicator. So that you can say if the market is open and we are above one-day max, like what we was easily doing with Tesla, and the momentum is going. This is also a strong momentum. I would say, for me personally, the one-day max, the one-day min, is a momentum indicator. It gives me the direction, so where the market will be going, and this was helping me so much to understand this.
Yeah, and we have a couple of examples that I think can really show you how you can potentially use that. So the first example is taken a few months ago, so it's an old example that we have used before, but it's the example on SPY, right? So let's look at this chart, and let me make it bigger actually. If you look at this chart and you're mainly using technical analysis, you see obviously a breakout of the 200-day moving average. You have a support level that is a breakout. So let's imagine that you are thinking of shorting the market right here. So you're in your short trade and you obviously did a great job at going short. You see a strong candle to the downside. But the question is, like, where do you stop? Where is your take profit? Where is your areas, right? So you might actually consider looking at a previous support, right? Just based on technical analysis, right? So here you see in the chart, your support level right there, very good profit target. But what if then you look at the price action and you see that the price actually doesn't get to that level? So maybe you missed some profit and you're also maybe giving up your profit. And if you didn't have like a trailing profit target, or you might have even lost your profit right there. So you see the price kind of moves suddenly back up. But what if you added, in this case, this was the gamma levels for that day. What if you added the gamma levels? So we talked about the put support level earlier this week. You can find the videos in the course or on YouTube. What if you add that and you also have the one-day minimum, right? So now you're in a trade, you did a great job at shorting the market, and the price is approaching some really key important areas, reaction zones. We talked about it. So again, this can really help you understand, okay, it's going to be hard for the price to breach those levels. You have our put support, 0 DTE, JAX levels, and you have our one-day minimum as well. So clearly you're looking at data, you're looking at statistics, and we're going to show you some backtesting results. So clearly that could have been a good example on, hey, maybe I should take my profit there, or maybe like I just move my trailing profit target towards the downside just to make sure that I don't give up too much profit on the bounce back. The second example that we have is another, it's kind of like a few months ago, a few weeks ago. It's another Nvidia example. So this was the levels for Nvidia, right? So let's imagine that you are in a long trade at the put support level or at the JAX level. You see a strong momentum. The price obviously is approaching the high vol level, so another important key area. We talked about it yesterday. And then kind of like you want to keep, so this was the level for the day before. So you want to keep on the trade and you have like the price action moving like that. And then you have the new levels coming up for the next day. So then you see the price action moving towards that one-day max for the day. So again, you are in a very good trade. You had a really good profit. What do you do there? So here we show you some backtesting results that we're going to go into the website as well. So you see that the one-day max is respected on 90% of the cases, in this case of Nvidia, over 202 days. So you only have a 10% chance, based on historical data, of course, that the price will be able to breach that level. So as a result, you see the move there. the price reacts, drops down, and comes down towards that level. So another good example on how can you use those data points to kind of like plan your trading and your trading setup.
I think, Fabio, one of the best example is, and I remind myself, I have no screenshot there, but I think it was on the last CPI data or on the data before. And maybe the guys who are now watching this video, so will watching the recording, we're going strong to the upside, we're going strong to the downside, upside, downside, and then the market goes crazy to the upside. And I was reading in the community, wow, what's going on with the market? The market is so strong, the market is flying. Man, I was taking my profits too early. Oh man, I'm an idiot. What I was doing, I let so much money on the table. And I was only comment, hey, look to the 1-day max. We was not reaching the high. We are on the mission. It's like sometimes when you have really strong momentum, in this example to the upside, and the momentum is holding and you see this, then there's no reason to get out of the trade until you're hitting the 1-day expected move. So don't let profit on the table, and this saves you very often profits. So because you don't get out early of the trade, because you know exactly, hey, there's the 1-day max, this is my target, and I be patient, I be very disciplined, and I will target the 1-day expected. If I feel like, oh man, maybe I should go out, I'm not sure, I get chicken now, then take some partial profits, but let the other run until it hit 1-day expected. And most of the time, when we have really strong momentum and we're getting events, we will hit this. We will hit this. So for this reason, I think the 1-day max is one of the best indicator outside on strong momentum days when we have events that you don't let profits on the table. It protects you to take profits too early. But you have to be patient. You have to be disciplined. And this is, for me, one of the good reasons why I'm loving the 1-day expected move, because it reminds me always on strong momentum days, don't take my profits too early, be patient. If I feel chicken, take partials and let the other run. And there are so many examples outside. You can backtest this on your own end. You have now the option that you can 5 days going back, or if you're going in the Discord where we have maybe QQQ, the futures levels, you can scroll to the upside and then you see the old levels from 1 month, 2 months. You will find everything there. Take it and backtest it. And you will see that this 1-day max and 1-day min helps you to don't get out too early most of the time.
Yeah, exactly. And before we go into example, if you guys have questions, please send them. If you go to our website, so once you create an account, free account, you can go under our guides and click on gamma levels. And here you will have all the different levels, the primary levels, the jacks 1 to 10. But then we have a document here about the backtesting. So let's go over that and let's look at some results. So the backtesting was taken at the end of last year. So the period is 4 years of data by looking at options data on SPX from the 1st of November 2019, so before COVID, to August 30, 2023. So in this example, and we've shared it before, so it's available on the website. You can also access the data right here. So if you want to access the Excel file that was used for the backtesting, you can find it here. You can actually run your own backtesting as well, and you can work on that. But essentially, the goal here is to forecast if the price over the next day stays within the 1-day max, so above the 1-day minimum, or below the 1-day maximum, or if it stays between both ranges. So for those who are doing like iron condor strategies, you really you are selling your credit spreads and your put spreads, your call spreads and your put spreads, and you want to see, okay, what if I just simply put my spreads above and below the 1-day max and 1-day minimum? So that's showing also those ranges. So you have very interesting results. So we know that on 4 years of history, 87% of the times the price closes above the 1-day minimum, and 85% of the time closes below the 1-day maximum. So again, if we go back to our previous example, and if you are in a situation like this, you know that potentially there could be very strong momentum in the market that could cause a breach of this level, but you could also have the opposite effect, which is what happened right here. And we see that happening a lot. So for example, if we go back to the SPY example, you know, we see like exactly like the 1-day minimum getting hit, and suddenly the market reacts and reverses to the other side. All right, so if we go back to our back testing, so here again, this is on SPX. We also did it on single stocks. So if you keep scrolling down right here, we have like the biggest stocks. So we have on QQQ, Nvidia, Netflix, Meta, Tesla. So you see that the results is very in line with what we saw. So for example, if we look at Nvidia, the 1-day max over 200 days was, so the price closed below the 1-day max on 90% of the cases and closes above the 1-day minimum on 84% of the cases. In the case of Tesla, 86%, the next day price action would close below the 1-day max and 86% above the 1-day minimum. So yeah, so looking at this data, very important, because again, how can you use this data? Okay, if you are like an option seller, it could potentially help you understand, okay, what is the volatility band for my spreads? It could also help you throughout the day. So if the price is approaching the 1-day max and 1-day minimum, then you could also like use that to sell spreads, knowing that there could be a potential reversal. So that could be one of the strategies. The other one is obviously directional. If you are planning a trade, you could use the 1-day max and 1-day minimum as a reversal trade, or if you are in a trade, you could use them as profit target or stop loss targets.
Yes, and I'm also knowing that many people who are in our community, and we want speaking with them, why they are taking MenthorQ is you listen, the first words is the 1-day max, the 1-day min. So it's really important for them to knowing where is the maximum area. So we have it not only on indices, not only on ETFs, we have this also on stocks. So, and this is the really cool thing. So you have this also on Bitcoins, you have this on forex, on FX. If you're looking to 6E, 6As, you have this also there. You have this on crude oil, you have this on gold. You can convert this also to spot prices if you want. So, and this is a big golden nugget for you to use it in your trading system. I'm 100% sure, no matter what A plus setup you have, for you it is really important how much to the upside can the market move, and how much to the downside can the market move, and also with a good profit target, so that you can target a really nice area in a strong momentum. Think about, give yourself only one single minute and realize how much profit you was letting on the table because you're getting out too early. And I can say this also to me. I let maybe millions on the table because I was getting out too early in my whole career. I'm really honest to you. But I was improving this. Choose the 1-day mix, 1-day min and 1-day max. So because I was more believing in me, because I have now and way how I can target something, and this was helping me also in my results. And I'm 100% sure this will help you. No matter what A plus setup you have, it will help you. And if you need help to implement this in your trading system, Fabio or me, we are here to help you. We assist you in any way. We have every week we have calls, so you can answer any questions may you have, and we were looking into this together. You get two brains. You get Fabio's brain, you get my brain, and then we were taking deep dive into it.
And I think also one of the key points is that the indicator is based on options data, so forward-looking data and volatility. So it's kind of like not just looking at historical price action, because that's kind of like a key differentiator, because you want to have forward-looking data, not obviously lagging data coming from historical information. So I think that's also one of the key elements that is actually helping us provide like great indicator there. All right. So before we answer, thank you for the question, guys. Thank you. Very great question. We're going to answer in a second, but let's look at some example from today, right? So here we have, in this case, we have our gold. As you can see, basically the gold almost approaches the one-day max and then kind of like pulls back to the high vol level. And then now it's kind of like in a ranging area right here. So always, like as we said yesterday, look at it as in zones. Like here, we were almost like few ticks away from the one-day max here. And then there was another good example on the copper future, where the price basically got rejected exactly from the one-day max. So let's imagine that you were able to take a long position right here. You now know that basically there's going to be two very important levels right here, and you could actually plan your exit strategy right here, or you could even think about looking at the potential reversal area.
That's exactly the other point. So, and we were seeing this in gold. So if you have the one-day max or the one-day min on your chart, so this is also a really good opportunity to think about, hey man, I have now the backtest data. I know that it could be most of the time 80% will be in the range. So this could be also a nice short, or it could be a nice long. So if we hitting the one-day min to go long is also a really nice opportunity. Depend on the market condition, of course. And also for the one-day max, it's also a nice opportunity, depend on the market condition, to go short. So and this is also really nice entry points as also exit points. So you shouldn't miss this.
Absolutely. All right, let's go maybe into some questions. So the first one is, Michelle, do you have any backtest data on the indices for the one-day max minimum? So the backtesting data that we have is currently this one. We will be releasing more backtesting information after the release in November. So we are working on that. We want to do it on futures. We want to do it on other stocks, and we want to go back in time further so we can give you more backtesting there. With the backtest data for agriculture futures be available? Interesting. It can. You're the first one, Fernando, who has asked for that. Yeah, we'll take it into account and we'll see what we can do. Let's go into this one, Patrick, because I think we're not going to talk too much about the swing levels, but I think this one is actually a good question, and we can kind of like introduce that topic as well. So how to combine the swing indicator and the one-day minimum and one-day max. So thank you, Hamid. So essentially, when we started, let's go back to our history. So when we started developing these tools, so the one-day max and one-day minimum, were basically mostly focused at the beginning, and then we realized after seeing the backtesting result, they could actually be used for directional trades, but they were initially focused for our option sellers, so our users who were doing like zero DTs, iron condor selling. So the goal there was to develop a tool that could actually give, with a high level of accuracy, a range for the day so that you could use to sell your spreads, right? So that was the initial use case. But then we realized that actually directionally you could actually really benefit from the indicator. And then obviously we started getting questions about, okay, like I'm more like a swing trader. Can I use a longer time frame, and can you be accurate on it? And that's why we developed our swing trading model. So the swing trading model, and if we go here, I'll show you in a second. They follow a similar approach, and we provide you with an upper band, a lower band, and a risk trigger. We provide you 2 time horizon, 5 days and 20 days. So the idea is very similar. The swing levels on top of that has also a directional bias to it. So we will also tell you if, based on the data, the trend of the asset is bullish or bearish. So it kind of gives you an additional layer of indication. And yeah, essentially the idea, the way you can use it is very similar. So for example, if you are plotting swing levels on your chart and we're hitting, for example, an important lower band that is still valid, then that also can be an indication of maybe that's like a very good area for a reversal trade, or maybe that's a good area for my take profit or stop loss targets.
Yes. And also you can use this as weekly levels, yeah? So I personally use the swing trading levels more like a weekly level. So especially when we have today the 24 October, I will look into this, okay, what are the levels from the 24 October? So I'm looking 5 days back. So now we have the function that we can go 5 days back, and I plot now 5 days back the levels on today. So as a little tiny golden nugget. So I'm not using personally the levels from today because it's a 5-day swing trading model. I'm now using the levels from the last 5 days. So we can go back 5 days. This is the cool thing with the new function where we have, and then plot the levels from 5 days. And I now exactly know this is my weekly levels. And this gives me also some little tiny information where are the weekly levels.
And yeah, that's a good question. Yeah, so let me go through that again. So yes, so you can use the same indicator. The only thing that you want to be conscious is that if you have, for example, in this case, we are uploading the QQQ. If you have gamma levels on QQQ and swing levels, you will only plot one. So you would need to add the indicator again. So you can actually have 2 indicators plotted, and one could have the gamma levels and one could have the swing levels. But the way you request it is exactly the same. So I go here and I type in swing. I can get my levels on my asset. I can copy them. I also have the ability to actually have a list. So I can actually request multiple levels for a list of assets, and I can also go back in time. So as Patrick was mentioning, if you want to go back and say, okay, what were the swing levels from Monday that are still valid for today, you can actually go back in time and look at the data from in this case, the 21st. Copy the text, upload into the chart, and basically you're up and running in a few seconds. Very easy. Yeah, the reason, Ian, let me answer this question, because nothing is displayed is because in the input box, you probably have QQQ levels and QQQ swing levels twice. So as I said, yeah, just put it in add the indicator twice and use a different indicator. Very simple.
And only for the people, as also when I was in the Zoom calls, and maybe you have not the premium version from TradingView, maybe you're using only the smallest version from TradingView, no problem. So if you have not so much place for the indicators, you can go into my view, and then you can add a second chart and then place it in the second chart, not on the main chart, on the second chart, and that's it.
Yeah. In terms of resources, and then please send other questions that you might have. Again, we want to stress, we have our guides. So once you create an account, you can actually access our guides. We have 150 plus documents right here. If you look at our products, we have our gamma levels, we have our JAX level, backtesting results, one-day expected move, but we also have our blind spots level. We're not going to spend time today to talk about that, but and also we have our swing trading levels. So here you can see how the swing trading models are calculated, how to add them to TradingView, and then you can also access our kind of knowledge base, strategies, so momentum strategies, futures trading strategies, option strategy, all of this. And basically also you have our academy. So if you have a free account, you get access to all of these courses. So from getting started to blind spots, to gamma levels, to how to use the models, integrations, swing trading, how to trade with MenthorQ, how to use it for forex and crypto, and and there's a lot of information right here.
Oh, I like your question, GSD. I know you was there on the last session, and this is a nice point. So you was taking attention of this, what Fabio was saying with the pinning. So yeah. Fabio, the question is for you.
So I think the pinning is a bit different. So the one-day expected move is not actually looking at the open interest in this case. So the pinning effect occurs when you have big areas with a lot of gamma open interest. So that's kind of like the delta hedging activity of market makers, right? So the levels that we talked about yesterday and the day before, they will experience the pinning effect. The one-day max and the one-day minimum are based on a proprietary model based on forward-looking volatility and other metrics that basically will tell you, based on the gamma levels and based on the data, what are the areas that could show basically like an extension. So it's like kind of like the price has gone too far and therefore we might see a retracement, or those could be your target area. So it's a bit different, but thank you for the question. Yes, amazing question. Let's see if we get more questions. So another thing that I think is part of the roadmap, we are gonna, at the end of November, release our intraday gamma levels, which again are gonna be very, very important because as we saw, for example, with the Tesla from yesterday, right? We saw a massive move of 20%. And obviously the one-day max, one-day minimum were broken. With the intraday gamma levels, you'll be able to actually have additional layers throughout the day based on the new option data that comes in the morning. So that's very exciting. So we share more in the next few weeks, but yeah, 29th of November is when we're going to do the release. So be ready because it's going to be game changer. Let's see if we get more questions. Do you have anything, Patrick, that maybe you want to add on your side?
No, personally, I think we were speaking about everything about one-day min and the one-day max, how you can use it. Yeah. I was giving you also some examples. What I was learning also from the community that people, I think the most important thing for any trader is that with the one-day max and the one-day min, you'll be able to hold your trade longer if you trust the levels and not let so much profit on the table.
Okay. Mickey, please send us those questions in Discord. We'll try to answer those. they're a little bit off topic for the session, but we will try to answer that in Discord if you can. Well, I don't know, Patrick, if you want to take that, but
let me read this very quick. Yeah, so the answer is really cool. You look to the QQQ, yes. But I would also say, you were saying that the market, the Nasdaq is horrible. I would say it's not horrible. So you must always think about. And I was speaking today with an analyst, one of my analysts, and I was speaking about, so hey, why are we staying today in the range? He was giving me the answer. Hey, we're waiting for Nvidia. The CEO will be giving a comment, but he was not giving the comment today. So, and then he was giving me also the information. He says, hey, Patrick, do you know we have next week all the big earnings? So there's a huge earnings season, and also we have election. So why do people should now pulling the trigger? So why the big money should go now in a big risk? And this is something where we should be also thinking about. When you say the market is terrible, I would say no, it's not terrible. The market is 24 hours open. The market was already making the move when the Tesla earning was starting. So yesterday we getting the crazy down move. This was not so crazy, but we get it. And now we was coming back. So, but this was overnight. If you be in US, if you be in the US or if you be in California, and you was missing the move because you was sleeping. But the market is never sleeping. So at the end, the market was the move, but not in the US session at the moment. So this is how I can answer this.
Yeah, and I mean, there's a lot of events in the next few weeks. We have, again, as you mentioned, all the big techs are reporting. It's going to be very important. The election at the beginning of November, new like economic data that's going to be important. So like the market is kind of waiting, and also always think how the institutional think. Right, it's October 24th. Right, we are 2 months away from the end of the year, but actually, really. Traders typically focus really until Thanksgiving Day, so like at the end of November, and then December is normally like a very quiet month where they are thinking about the next year, 2025. So obviously, as Patrick was mentioning, like you can imagine that institutional traders are now looking more at protection rather than taking risk because they've already had potentially a good year this year. The market has been going really up a lot since the beginning of the year. So in their mind is really, how can I protect my returns rather than making more returns, because that's kind of like their focus.
Yeah, and for me, I'm normally a futures trader. Sometimes I'm stock trader. But on December, I will leave the futures market completely and switching now to stocks under 10 US dollars, because I know there we have the Santa Claus rallies where the stocks going 200, 300%. So for me, it makes in December most of the time no sense trading the futures, because I know the price action will be on some different markets, and sometimes it's really cool to leave, think out of the box, to think of, okay, now in the Nasdaq I have the movement, but maybe you was missed the move in gold and it was came down. Maybe you was missed the move on crude oil. Maybe you was missed the move in Cooper. So think out of the box, look into different markets, and don't focus so much only on one ticker.
Mm-hmm. Yeah. All right. So I think this is great. I saw some questions. More backtesting will be coming after November. Forex currencies, yes, we have the data. We'll create more backtesting after the launch. Right now, the team is focused on the intraday data. So after the launch, we'll be creating more documentation and more backtesting for sure. So I think so first of all, we want to thank you guys for being with us, spending, I know a few of you have been with us for the whole week. So thank you for taking the time, and I hope this has been useful. If you are new to us, you can actually join our mailing list and our tools by creating a free account. If you create a free account, you can actually access all the free courses, all the guides that we showed you, and all the other tools, and also our Discord community as well. And if you have any questions, please do not hesitate to contact us. Me and Patrick will be there to answer your questions at info@mentorq.com. And to thank everyone for the time, we're also giving away a coupon code that will be available for our yearly plans, which will give you a 40% discount. And to enable that, you can come into our pricing page, click on the yearly plan right here, and click on one of those options and apply the Live 40 coupon code. I think a few of you have already used it, and thank you so much for the support. This will give you access to 12 months of the membership, as well as full access to the academy right here. So the basic and premium courses will be available to you as well.
All right, yeah, thank you guys. Thank you, Mickey Man. Thank you, Ian, Steve, GSD, Amit, and all other ones. Yeah, thank you, guys. I hope you take out something. Take all these gold nuggets out. Find something what works for you. This is the most important thing. So at the end, you should also look into this, how MentorQ can help you with your A+ setup. Trade most of the time your A+ setup, and then think about how MentorQ can help you. The one-day max and the one-day min is personally, I think, where in any A+ setup find places. High wall is my favor, but I know from other people also put support, call resistance. Look into this and observing. If you feel like, okay, I want to test this more out before I going with the yearly, no worries. You can now taking a 7-day trial, write Fabio a message, and maybe then we can make also another deal. So if you be more the one who say, oh, I want to test this out before I go for the coupon code, okay, I understand. No worries, you can do this also. But I would say it will help you. And with the yearly, you can also, you can come into the academy and you have access to all our courses. One of the favorite courses, and this is one of the best courses, I think, is like timing, setup, and location. This was with me, this was with Steve, this was with 2 community members, how they're using this concept. And this was very, very powerful. If you're understanding the concept about timing, location, and setup, and you ask you the 3 questions whenever you're going into the market, 3 simple questions. This is now the right time to go into the market. This is the right setup to go into the market. And this is also the right location into the market. How this is working, you find this in the course.
Yeah. And GSD, yes, you can, absolutely. So send me a message and I'll send you the instruction on how to do it. If you want to send us a message at info@mentorq.com, and we'll get back to you and help you get set up.
All right, ladies and gentlemen, thank you for your time. Tomorrow is Friday. Think about capital preservation.
Yes, and tomorrow we'll be back talking about the gamma levels 1 to 10. So yeah, stay tuned. Another good session. We will be there again, same time. And thank you so much, guys, and see you soon.
Bye-bye.